Donald Trump has officially appointed a new Securities Exchange Commission chair, Paul Atkins. Trump has already come out and said that he would fire Gary Gensler on day one. Gensler went ahead and decided to resign beginning on the day of Trump's inauguration. Of course, nobody wants to be fired, especially not Gary Gensler here. But looks like it's too little too late. Good Morning Crypto here posts, President Trump officially selects pro-crypto Paul Atkins to replace Gary Gensler as SEC chairman. And that definitely appears to be the case. He says, great news for the XRP community. It's great news for retail investors in general, both those invested in cryptocurrencies and in financial markets, stocks, and other equities. So let's take a good peek and see what this guy's all about. Atkins is being railed at by some people here for his stance under the, well, for acting as a commissioner under George Bush. And from 2002 to 2008, Atkins was part of the Securities Exchange Commission. And he spoke in depth about naked shorting, and I've got a video to show you after this. Check this out. He said, well, there's a huge amount of naked shorting he's talking about, obviously, to talk about on that topic. I have a lot of confidence in most of the folks that are at the SEC. Remember, this was in 2008, 2009, after he departed. For example, similar to after 9/11, they did ease restrictions to allow corporations to buy back stock. During the recent crisis back in September, I think they had a rule that came out to allow that. Then, with the respect to naked shorting, that's a huge issue. Some steps that I had thought they were going to take immediately when I left the commission, unfortunately did not get done. For example, I think it would be helpful to have a penalty if you short a stock but do not follow through in borrowing it and delivering it because you don't want to pay for borrowing it. You sort of kick the can down the road. That sort of thing, if it's allowed to go on, is a problem. I think that fosters some of the issues in short selling. And keep in mind, Atkins said this in 2009. This guy has been with the SEC and with other pro-crypto and other pro-markets firms for a long time. But that being the case, he has still been speaking out against naked shorting. I think that's definitely a good thing. Being pro-crypto doesn't make somebody anti-retail. As a matter of fact, I think this is quite the opposite. I'll explain why. So, Donald Trump came out and made a statement here about the SEC. But I'll let Trump speak for himself. He's very good at that. He doesn't need me to speak for him.
So I named her Pocahontas. Elizabeth Warren and her goons, and she's very nasty to you. She hates your people. She hates everything about you. Will keep their hands off Bitcoin. They're going to keep their hands off crypto. They're going to let it grow. We're going to let it grow. On day one, I will fire Gary Gensler and appoint a new SEC chairman.
Listen to those cheers. Listen to that crowd. People are beyond ecstatic to hear this.
I didn't know he was that unpopular. Wow. I didn't know he was that unpopular. Let me say it again. On day one, I will fire Gary Gensler. Whoa. And we'll appoint a new SEC chairman who believes America should build the future, not block the future, which is what they're doing.
As you can see, in my opinion, that's Paul Atkins. Teresa Goody Guillen, I think, would have been very good at this as well. But she either didn't want or wasn't chosen as the nominee. Whereas former Securities Exchange Commission commissioner, he wasn't the head chair, he was a commissioner, Atkins, on short selling. Here, before I show that to you, here's the SEC website so you guys can see it and see exactly what I'm talking about. This was Paul S. Atkins, directly from their website. He was appointed by George Bush to be a commissioner, not the head chair, in 2002, and he served through 2008 for 4 years. He assisted financial services firms in improving compliance with SEC regulations, worked with law enforcement to investigate situations where investors were harmed, and he even helped with investigations involving the Bennett Funding Group, a $1 billion leasing company that perpetrated the largest Ponzi fraud in U.S. history, in which more than 20,000 investors lost much of their investment. He assisted the company's court-appointed bankruptcy trustee, served as crisis president of Bennett's sole surviving subsidiary, stabilized its finances and operations, rebuilt and expanded its business. He improved its share value for the remaining investors by almost 2,000%. This is excellent to see. He seems to be very well-rounded overall. And this guy graduated from Vanderbilt University School of Law in 1983. Let's hear what he has to say about naked short selling, because I like what I see here.
Ignore that the shorts may be pushing around. It's really hard to ignore that the shorts may be pushing around these stocks. Do you think that's true? And should there be a short selling ban?
Well, I've never been a fan of short selling ban, and as you just heard, the SEC does have the authority to do that. But I think that would be a big mistake for them to do that. It's
in this regard, for those of you that want some context, they're talking about banning short selling on big banks. This was during the SVB debacle of last year, in which Silicon Valley Bank, First Republic, and many others were being short sold because the companies were insolvent.
It showed in 2008, it was shown to be ineffective, and because there are many other ways to short a security, not just by shorting it, but through the derivatives markets and otherwise. So it's really sort of just a bad policy, and it distorts markets, and it creates more panic, I think, than otherwise.
Paul, nevertheless, we do seem to have moved from a situation where we're trading on the fundamentals for the banks to where we're not trading on the fundamentals on the banks. We don't know what's going on within many of these institutions, and the market, judging by the moves we've seen over the last few days, is in certain cases ignoring some of the news that it's getting. Have we moved to a point where we need to do something? Do we need some sort of a circuit breaker? How do we control this market and the way it's treating these institutions?
Well, you know, this is a big issue, the whole issue of what we call confidential supervisory information, the whole thing of bank secrecy, and the way the regulators try to control information from the market. So really, every day, when you think about it, there, especially for large banks who depend on commercial paper, which is essentially an IOU and a very short-term, debt instrument where they borrow money to finance their operations, they depend on. I mean, there are people out there, flogging those securities, but they don't really know what the regulators think and see behind the scenes. They're just looking at the static financial statements. And so that is one thing where the market then, especially with banks, where their assets are not marked to market every day, then, that creates issues.
But Paul, that also implies that facts would help stop this. And I say that because the banks have said that their deposits have actually increased, and that hasn't really done anything. So it doesn't necessarily feel like more information would be better.
No, but it kind of sets an underlying tone because in times of volatility, it's hard to say that more information would stop a run or whatever, but it sets an underlying tone for the total way that people look at financial stocks, and especially if they're not sure what the true mark to market is, because the unrealized losses anytime that you start having a volatile interest rate environment like we saw at Silicon Valley Bank and others. You look at the Fed, they're sitting on, huge unrealized losses. But the argument is we're holding this to maturity, so it doesn't really matter. For banks that have to
Yeah.
finance operations with short-term loans, it could and perhaps does make a difference.
If the hold to maturity book was mark to market, if we had better visibility on what is happening with deposits, do you think that the market would calm the situation down?
Well, you never know. I mean, you look back at 2008. So even though, Bear Stearns and other securities firms, of course, have to have their, their assets marked to market, it really, didn't really stop things because there
Yeah.
was the
He's not lying.
leverage issue and everything else back then. So now, when you look at, especially as regulators, and I think that's the real failing with the way the Fed and the FDIC were dealing with the failures of Signature and Silicon Valley Bank. They didn't really take, it's like at the beginning of the bank examiner's manual, to look at interest rate mismatch and to examine for that. They failed in that aspect here. And so the report that came out that Michael Barr issued, kind of touches on it, but I think it really disingenuously tries to, point the finger at his predecessor, which I think is completely, a crazy type of thing to say.
Well, Guy, it also raises the question, do we need to see universal deposit insurance at the end of the day? Like, is that, it has to go through Congress, sure, but is that the only thing that's actually going to provide true immediate confidence?
We can't afford it.
It may be certainly one of them. Yeah, well, maybe in the short term we could afford it, Paul, and I think that may be one of the questions I think the White House is grappling with right now. But Paul, Alex raises an interesting point about whether or not we need this now. Has the world changed? We may not be able to afford it, but in a digital world where money can come out of banks in a heartbeat, how do we manage the speed of which things can change? Is the only way to basically say your money's good, don't worry about it, because otherwise you have a kind of tragedy of the commons kind of environment where the market, where depositors are looking around them and going, should I take my money out now? Things could get out of control really fast. Do I want to be placing myself in that kind of situation? The world has changed. The digitalization of banking has changed the situation.
No, that's true. That's absolutely true. But can the government and will the market believe that the government will backstop every single penny of every single deposit? Does that invite everyone from around the world to come to the United States and the United States government, the taxpayer really ultimately, because the bank insurance fund, you could never have enough money raised from private banks to possibly guarantee all of that. And maybe, maybe there's some calibration that needs to be done for corporate deposits and whatnot, but you have a huge issue, and the increase from $100,000 to $250,000 back, whenever it was 14 years ago or so, has had to be dealt with the bank insurance fund and the way it's managed. And so can you imagine if there is absolutely no limit? That would be quite an astounding a thing to do, to have a blank check.
That was really interesting, I gotta say. He was talking directly in regards to the bank bailouts of 2008, and he's saying that the banks shouldn't have a blank check.
It's really hard to ignore
that people that they shouldn't have a blank check with which to backstop all deposits. And I have to agree with him on that. There's way too many bank derivatives, toxic derivatives out there being used, in which if they had a blank check to backstop all deposits, what we're seeing now, $205 trillion worth of derivatives, notional value. Remember, keep in mind, that's not a small amount. $200 trillion. That's 10 times the GDP of the entire world in derivatives alone. That would just enable banks to go out there and make more dangerous bad bets. But I want to read a couple of comments here from some channel members. Thank you all for your support. I appreciate you. Bang says, so he was there when Madoff was busted. Yes, I believe so. I believe that Paul Atkins was there when they busted Madoff. And as I just read to you moments ago, he was also part of one of the largest, basically investigating one of the largest Ponzi frauds in U.S. history, where 20,000 plus investors lost a ton of money. And he, as a matter of fact, took control of that company and stabilized the finances, operations, and rebuilt and expanded it so that the share value for remaining investors increased by almost 2,000%. Now, it seems to me like, keep in mind, most of those were retail investors, that this is a man who seems to actually understand business, understand money, monetary policy, and not just ruling with an iron fist. The Securities Exchange Commission, up until now, has done nothing more than make regulations up in court as they go along under Gary Gensler and the current administration. And what I'm seeing here with Mr. Atkins is the potential for him to actually come out and speak out against naked short selling like he's already done in the past. And it seems like when he left the SEC back in 2008, he was thinking that they were going to proceed with the steps that Atkins and company had already taken to stop a lot of what was going on in naked short selling. And he's literally come out and said, it would be helpful to have a penalty that if you short a stock but do not follow through in borrowing it and delivering it because you don't want to pay for borrowing it, you sort of kick the can down the road. That sort of thing, if it's allowed to go on, is a problem. That fosters some of the issues in short selling. With respect to naked shorting, that's a huge issue. And he was upset that the things that they had enabled, or should I say, begun while he was with the SEC, were not completed after he left in 2008. And I'm hoping by his own actions and own words in the past, from what we've seen him say and do as the former commissioner from 2002 to 2008, and with his work now with cryptocurrencies, which if you're invested in crypto, you need to watch this. This is definitely huge. Because here, since 2017, Atkins has led industry efforts to develop best practices for digital asset issuances and trading platforms as co-chair of the Token Alliance. From 12 to 15, he served as independent director and non-executive chairman of the board for BATS Global Markets. And in case you don't know, BATS is a dark pool. BATS is an alternative trading system. They're an operator of electronic U.S. and European securities markets trading listed as cash equity securities and equity options, which has been acquired by SIBO, which is partially owned by Citadel. So I will say, don't count on dark pools and payment for order flow to go away under Paul Atkins. So if you want to counteract dark pools, you need to go and click that link down in the live chat or down in the description right now. Look into Lit Exchange so that we can route orders to Lit Markets automatically on your behalf when we launch. You can own part of the company, and for the first time in history, under Donald Trump's Job Act, using Regulation CF exemption, we have filed all of the documentation with the Securities Exchange Commission EDGAR website, and we are listed selling equity to retail investors to own the company pre-launch and pre-IPO, where you can actually be part owner of Lit Exchange, part of this upcoming stock and crypto brokerage. And so the news of Paul Atkins as being named as the new SEC chair is extremely bullish for cryptocurrencies, extremely bullish for Lit Exchange, and for stocks in general, crypto in general, retail investors in general. But don't think that dark pools are going to be eliminated just because he's here. Paul Atkins will be the new SEC chair, says Dave Lauer. Let's take a look and see what other people are saying, and then after that, I will show you what's up. You know what? Let me show you about the cryptos first. The new SEC chairman, Paul Atkins, is on the advisory boards of Securitize. It is a company that Ripple invested in 2008 and whose CEO spoke at Ripple Swell 2024. Ondo Finance is one of BlackRock's and Securitize's largest collaborators. Ondo coin, Ondo token, crypto token, is basically up today fairly nicely, as is several other cryptos. Take a look at RSR. RSR is up pretty significantly today, 25%, which is a stable coin. As pro crypto Paul Atkins is an advisor of RSR, is going to replace Gary Gensler as the SEC chair. The RSR was up 25% in just a matter of minutes, from 17 cents to from 0.017 cents to 0.023 cents, just in a matter of moments after that. Ondo coin today, I'm looking at it here on the all-time chart. When it launched here in January of this year, it was about 9 cents. And up to today, it was at about $1.17. And today, it's gone from $1.20 to $1.84 alone. It was from today it was from $1.63 to up to $1.90, currently sitting strong at $1.84 with over 900 million volume traded today alone on Ondo coin, ONDO. I'm going to scoot that over for you guys to see it a little bit better. So that's definitely bullish for cryptocurrencies, bullish for stocks, bullish for stopping a lot of the bullshit manipulation that's going on in naked shorting and in stock markets, and extremely bullish for upcoming stock and crypto brokerage lit exchange. Make sure you guys go and take an opportunity to look into that. We are offering, as I said, for the first time in history, under Donald Trump's Job Act, via Regulation CF exemption, the opportunity for you, the average retail investor, non-accredited investors, the opportunity to own equity in the company before we launch, before we IPO. Because when we IPO and people are paying IPO prices, there's a good chance that you're going to be wishing you would have bought in at the current prices. Let's put it that way. Wolfie says, imagine Elon using $10 billion to buy stocks known to be sold naked. Just imagine. What's going on, Fugazi News? It's great to see you, my friend. And Wolfie says, Paul Atkins said this before. Other countries suspend short selling. Those markets didn't crash or panic. That's true. But at this point, it doesn't seem like there's any reason to suspend short selling in its entirety. But to eliminate and rail against naked shorting, in my opinion, is absolutely massive. We have never seen any Securities Exchange Commission commissioner, head chair, actually come out and say these things about naked shorting. So we need to keep stay in his ear, as well as between Donald Trump, DJT, stock, CEO Devin Nunes, and of course Kash Patel, who are working together to basically investigate Citadel Securities and their illegal naked shorting of stocks and other equities. These guys could be a significant blow to internalizers and wholesalers that are illegally naked shorting on behalf of their hedge fund. So that would be a huge conflict of interest for the market makers to continue doing so, and they could potentially do some serious good for retail investors. Not to mention, this is probably really bullish here for Ripple, for XRP, for Ondo, the crypto token, for RSR, the stable coin, as well as for lit exchange, as I told you guys already, the upcoming stock and crypto brokerage that you have the opportunity for the first time in history to invest in before any hedge fund, before any venture capital firm. We have come to retail investors, and we will eventually be going to venture capital firms, not ones like Sequoia that have invested $3 million in Robinhood's pre-seed round. We are going to be going to companies that are pro-retail investors and going to retail investors directly, because that is the whole point of the company. We are for retail, by retail, stopping market manipulation, stopping the manipulation that occurs in dark pools, stopping the conflict of interest that occur with payment for order flow, and giving you a graphical user interface and the ability to use artificial and swarm intelligence in ways that has never occurred before. Dave says, my impression is that this crypto-focused pick with someone who has the institutional experience for the job. It remains to be seen what his approach will be for equity market reform and whether or not he thinks there are serious problems to solve. Let's hope he does. And I think it's pretty obvious that the man definitely thinks there are serious problems to solve, especially with Kash Patel, the new upcoming director of the FBI, railing against certain companies like along with Devin Nunes, also doing the same. And they are currently discussing that they're investigating certain companies out there, probably and allegedly, like Citadel Securities and Virtue Financial. Dave says that Paul has expressed skeptical views about FINRA in the past, but we're probably looking at marginal reforms rather than overhauling the SRO system. People ask, is he going to do stupid things like reverse the CAT system? Dave responded, I think he's probably very sympathetic to Citadel's view that CAT funding doesn't make sense, but I doubt he'd disband the CAT. Then again, the Republican commissioners will push for it, but at the least, there will be a fight over who pays for it and how regulators can use it. The good news is that we've seen today that as of this week, Citadel Securities has lost a lawsuit in which they were trying to get out of paying for the CAT system, and that is not the case. The courts have ruled, and the appeals court, I believe, has ruled that Citadel has to pay for the consolidated audit trail. President Trump, of course, named Paul Atkins as SEC chairman. He not only promised a libertarian in his administration, but to ensure crypto is protected. He's following through on that promise now.
I will ensure that the future of crypto and the future of Bitcoin will be made in the USA, not driven overseas. I will support the right to self-custody to the nation's 50 million crypto holders. I say this with your vote. I will keep Elizabeth Warren and her goons away from your Bitcoin. And I will never allow the creation of a central bank digital currency. I will ensure that the future of crypto and the future of Bitcoin will away from your Bitcoin. Goons away from your Bitcoin. I will keep Elizabeth Warren and her goons away from your Bitcoin. And I will never allow the creation of a central bank digital currency.
You hear how loud that crowd got? Because a central bank digital currency would be one of the worst things that could possibly happen to Americans. Whether you know it or not, it would give the government every power to implement all sorts of dangerous social credit scores and give them the ability to watch over every single dime you spend. So keeping crypto alive, keeping it mostly decentralized, depending on the coin, right, is extremely important for retail investors, I would say. So again, huge news for Ondo coin, for RSR, for XRP, XLM, Bitcoin, Securitize, and even Lit Exchange. Massive news for Lit Exchange. Go check out litexchange.com if you guys want to learn more. We are an upcoming stock and crypto brokerage that is for retail by retail, that is going to automatically route orders to lit markets, that is going to prevent market manipulation from payment for order flow and dark pools, that is going to allow you to use artificial and swarm intelligence in a way that has never been done before with a bleeding edge user interface. You can join our founders program now. You can see our SEC Edgar filings on the SEC Edgar website here. You can see the FINRA approved registered Silicon Prairie website here in order to become a founding member of the company. You can see here multiple different filings on the SEC Edgar website for Lit Exchange. And over $500,000 has already been raised by retail investors in the Founders Program, and not a single penny has been spent on advertising. So once we start spending some money on advertising and getting it out to more retail investors, we will reach our stretch goal very, very quickly, I feel. As well, you can join our waitlist on our website. Thousands and thousands of users have already joined the waitlist to participate in the launch of our Founders Program, the launch of the brokerage, and to bring their assets under management. And again, new user signups will be limited and chosen via invitation only upon launch, and it will be chosen on a first come first served basis. So people will be able to join the beta test that are founding members, as well as receive many other perks. So you can get a lot more details from there, and do all of your due diligence on the company there on litexchange.com and on the funding portal as well. The funding portal, Silicon Prairie, is a FINRA-approved funding portal and a fully licensed broker-dealer with the Securities Exchange Commission as well. And FINRA, as of course. So you can see our pitch deck, business plan, auditor's report, private placement memorandum for the Regulation C and Regulation D filing offerings, subscription agreements, all of the information, highlights about the company, and any risks that may be involved as well. There are significant amounts of information, many pages there in regards to what we're offering, what kind of perks and benefits you receive, the full business plan with all sorts of good numbers and everything that you want to possibly get there. I won't be going through every single thing of it right now, because there is a lot of information there for you to learn about the company and the future. So that being said, I am extremely bullish on Paul Atkins for retail investors, for ending naked shorting, for implementing some reforms there to actually give out fines that are more than just a slap on the wrist, and for avoiding a central bank digital currency, which would be an absolute crisis in America. So, my friends, I want to say thank you as well to all channel supporters and members. Thank you as well to everyone who is subscribed to the channel, whether you're watching on Rumble, Twitter, YouTube. And for all of you who are founding members of Lit Exchange, all 250 plus founding members, I appreciate your partnership, and I look forward to this journey, because we are just getting started, my friends. Cheers. Have a great rest of your day. I'll see you tomorrow for another stream.